Welcome to TheoTrade. This is Don Kaufman. You're watching the Theo Night video for February 1st, 2016. Let us kick it off tonight with really now weighing in at 806 pounds, Google, which is also now officially the largest market cap anywhere in the known universe. Google today eclipsed Apple in terms of the largest company in the not only the S&P 500, but once again in the universe. That's not really much of a news flash to me, but you have to decide which Google. Is it Google L or Google, or is it the full alphabet soup? Which is ultimately the largest? It's the combination thereof. But I look at Google, so the earnings come out. And what I wanted to explain a little bit about is efficiency of the market in this particular case. So with 4 days remaining, if you look over to the right-hand side of the screen, you will see the expected move. I talk a lot about expected move. In fact, I talk continuously about expected move because it's one of the most important things, whether you're going to trade stocks and options and futures, knowing that the forward market, when I say forward market, it's what an option is, right? What's pricing, what we're going to be at in 4 days in the forward market is pricing in about a $52 move either up or down. In fact, there's also a market maker move found on thinkorswim, and that's pricing in about a $47 move plus or minus. Market maker move, that's just a 1 day, one standard deviation move. So what did we do? Well, ultimately, Google closes at 770. Where do we go to? Right in the neighborhood in the after hours, trading about 806, 807. Now, if you're looking at this and you're going, but it only moved, 30, some odd dollars in there, not even 40. You're right. The first move, though, in Google was right to the $51 mark. However, we're not in the pre-market yet. We're not open yet. So this move that's expected, whether you're looking at the market maker move, which is, again, just for 1 day, or whether you're looking at the expected move, which is the full 4 days, you have to remember, this, is being priced for when the market is trading. What market? It's the options market. And the options market, well, that's only open during cash hours. So keep in mind, Google, she's not done yet. All right. Tomorrow morning, you could see a $10 bump up, taking us right into the expected move over there. But you also have to remember the expected move. It's expecting a $51 move. All right. It doesn't say it's going to move 51. It's supposed to be in that range, plus or minus $50 inside, of course, that range. And it did just that. So if you sold premium outside of the $50 expected move, you're beautiful. Enough with Google and the earnings announcement. It's probably like the most over-analyzed and talked about thing. In the end, it doesn't matter what anybody thinks about Google. It matters what the market does. And what does the market do? Only order flow would know that. That order flow will come piling in tomorrow, 8:30 a.m. Central Time, and we're going to get a good feel for some of the volatility inside of Google. Don't be surprised if you see Google migrate right into that like plus or minus $51 region. Now, done with Google here. Let's go first to the S&Ps. And what did the S&Ps do ultimately throughout the course of the trading day? So this is in the after hours here. They're down about 675. All right, a little bit of volume trading. The S&Ps have just reopened. But let's go ahead and let's take a look on a chart. Yes, it's a chart. What do the S&Ps do today? Well, this is today. This is the beginning of what? Tomorrow. All right, the futures are already opened. It's the afternoon. It's the evening. They're already open for tomorrow. So today, what do? They formed the infamous doji, and doji star. Or you could even call this almost a dragonfly doji. That's right. Don doesn't necessarily like charts, but Don knows his dojis. With that, I'm actually looking for us to come right back down in and around this 1911. That may actually happen in the evening hours tonight. So look for us to trade from 1924, possibly back down to the 1911 kind of handle. If we crest through that, there could be some more downside activity. But, the one thing is I'm not much into charts, but I got to hand it to the whole idea of support and resistance. So they say, old resistance becomes new support. Well, this was what? This 1911 number, it was support, it was support, it was support. All of a sudden, boom, we dropped below it. It became resistance, became resistance, became resistance. Okay, then we actually came all the way down to our favorite number of 1871. Drink. We were saying that in the chat room every time we hit 1871 drink. Anybody else on that one? Anyway, 1871 becomes kind of the new support. Then we touch where back to 1911. It becomes resistance. We try to hit it again. We smoked through it last Friday. And once again, what does it do? We touched down to 1911 earlier today, and it becomes support once again. Kind of feels like we're coming right back down to that neighborhood of 1911 of the S&P futures. What's strong, what's weak? Again, one of the disconcerting areas of the market is still the bonds for me. I just got to point this out. I mean, the bonds don't lie. The bonds seem to, they know something. If risk is going to abate in the marketplace, don't you think you're going to see the bonds sell off a little bit? And we're seeing the exact opposite. Bonds in the after hours, they're up 15 ticks. 15 ticks is a half a point move. Yes, bonds use ticks. It's the old Spanish galleon version of trading. There are 32 ticks to a 1 point move. There are 15 ticks. That's almost 16 ticks, about a half a point move, though, up in the bond market. Again, today, we had a day that we kind of waffled. We traded up in the markets. We traded down to the bond market. Same thing with the S&Ps. But always remember, those bonds up. It's going to put pressure forth to the XLF. And that's been, the XLF is always kind of the object of my affection over here. But tell me, doesn't it look like the XLF? Maybe this rally fails. Oh, we're going to know more later this week. And the XLF, we're kind of sitting on pins and needles in there because the elevated volatility situation, as I pointed out yesterday. Now, another area in a specific trade that I do want to cover. And that happens to be a trade. There was some confusion around this about the XLE. No, not the XLF, which is the financials, the XLE, which is none other than the energy sector. What do I want to do in the energy sector? Long term, I want to be long the energy sector. So long term, I want to be long the energy sector. But in the short duration, I think it's an overcooked turkey. So I want to explain. Yes, I'm going to bring up a chart to explain this. By the way, look, it's a head, it's a shoulder, it's a shoulder. What do we get? Nothing, because we went down. Anyway, if you look right here, and I've explained this in the chat room numerous times, but the move that we've had in just the last kind of week and a half trading in the XLE has been this explosive move from the 151, 152 range all the way up to the 158 range. That move is a $6 move to the upside. $6 move in a product like the XLE, $6, $6, $6, typically takes about 46 days to occur. So we're massively outside of the expected move, because here we have 1, 2, 3, 4, 5, 6, 7, 8 trading days. In a normal 8 trading day period, I'll just use the 11-day period, we simply see about a $3 move. So you can say we've moved double the deviation. So I have a little expectation in the near short term. The XLE kind of comes back in a little bit, maybe down to the 154, maybe the 153. I don't know. Maybe we get lucky, maybe a little bit lower. Nevertheless, I went out and I put a very short duration bearish spread on. I purchased the 58-56 spread. I purchased the 58-56 spread, and I did it risk a buck to be able to make a buck. The exact same trade is there right now. If you want to do it, okay, you can follow along. It's an 11-day trade. Right now, it's trading for 90 cents. What's your risk? 90 cents. When do you close it? When you make about 60 to 70% of 90 cents. Again, your risk is 90 cents, but there's a high probability that sometime in the next 11 days, and I did it really short duration, sometime in the next 11 days, what's the probability we come down to 56? What's the probability we come down to 55? There's an answer for that, It's called probability of touching. And the probability of touching over here, look at that, about a 77% chance. Okay, there's even almost a 60% chance that we come all the way down to the 55 level. I don't know, I kind of like our odds. So I put one of these things on. Look at this. It's one contract capped in one lot. Strikes again. And I put it on the other day. Nevertheless, it's still a viable position over there for you. So again, it's the Feb 2, all right, buying the 58-56 put spread. So I'm buying a debit spread for about 90 cents. Just looking for a quick back off in the XLE. And if the XLE does kind of back down to that 54, even the 53 range in the next week or two, then what am I going to do? Well, I'll close the bearish position, and then I'll look to get long. I've been selling puts over there because I do want to get long the energy sector. Anyway, with that, as the week progresses here, we are still undoubtedly in a very volatile marketplace and a volatile situation. The volatility futures skew, everything is still displaying a lot of risk on the horizon. Obviously, the bonds are all over it, trading all the way to the 161 level. Keep your helmet strapped on. Don't let a slow Monday kind of lull you to sleep over here. We're still doing, look at this. This is in the XLE, a lot of volume out there. Take a look at the S&P futures. Today was a day where we had a decent sized range in the S&P futures, and you're thinking, nah, today was a quiet day. Really? Because we still did almost 2 million contracts in the S&Ps over there, so we're getting it done. All right. Keep an eye on the markets. Again, later this week, we're looking for the jobs number as well on Friday. So a lot of posturing and a lot of trading going to be setting up for that jobs number later this week. Thanks a lot, everybody, for joining us here at TheoTrade, at Theo Night Video. My name is Don Kaufman. Be back tomorrow and the rest of this week. Have a good evening. Bye-bye.